buy, things are not cheap. When you're feeling scared and want to invest in fixed deposit, that is exactly the time when things are cheap. So I think what's interesting for me and what stands out for India, and we wrote a piece about it called The Joy of Rowing Downstream, is that India offers a unique combination of growth and acceleration.
Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get straight to the headlines this afternoon. The Nifty slips below the 10,200 mark for the first time in 3 weeks. Oil marketing companies are among the bigger losers in trade.
10-year bond yields crossed the 7% for the first time in more than a year after latest inflation numbers shuts the door on a rate cut by the Reserve Bank of India next month.
Airtel sells 4.5% stake in Bharti Infratel for 3,325 crore in the open markets. The proceeds will be used to pay debt.
Sun Pharma, Eicher, Gale and Bank of Baroda are the big corporate earnings of the day.
And sugar production is set to rise for the first time in 3 years, according to a survey conducted by Bloomberg News.
But first, let's talk about the markets. It's not looking great for equities, neither is it the situation looking rather tepid on the bond market as well. Neeraj is taking a closer look at what's going on in stocks. Neeraj.
Higher volatility, that's what's going on. So in India, VIX has jumped up quite significantly in today's session as well. But if you look at the cumulative rise that we've seen in India VIX over the last few weeks, you will see this rising trend. So 14.3 currently, and that has certainly gone up. Maybe the rise in bond yields, I think we were talking about that for the last few days, is all leading to this. But individual components, OMCs, now they're down today, but down for the last few days. I think in the month to date or a 1 month return for any of the OMCs, IOC, BPCL, etc., will show about a 10% downtick that has come into these counters. So that pocket is lost out in a big way. In today's session in particular, IT has lost its mojo. It was giving the helping hand yesterday's session, a couple of days earlier. But in today's session, TCS is down about 1.5%. HCL Tech, which was up about 2%, is now just about 0.5% higher. So IT is coming off in a hurry. And Larsen is doing all it can to put pressure on the index as well. So another 2.5% of a downtick. And that's a heavyweight that would put some pressure on the index as well. I just thought I'll mark a couple of green pockets as well. It's not all lost because there are a few things which are doing okay. Cadila came out with numbers during market hours just about half an hour ago or thereabouts. I think numbers are strong and the stock is duly reacting. It's about 3.5%. A beat on all counts. You don't normally see this in pharma counters this time around. So good going for that. There's some numbers flashing on your screen. Dilip Buildcon, and that stock should also come up on your screen. I think on a YY basis, it's a big jump that the company's shown in profitability, and maybe Dilip Buildcon could also be reacting. It's a small counter, but it's an interesting set of numbers, a blowout set of numbers, I might add. No, not too much of a reaction thereof. And last but not the least, something that can qualify as a stock of the day, Harsha, and that's Repco Home Finance. It is really heartening to see a housing finance company post stable asset quality and good gains. And that stock, off the highs of the day, but still up about 7%. So not bad going.
7% on Repco. You know, those numbers on Dilip Buildcon is interesting. 115 crores as opposed to 7 crore. But let's shift focus. Thanks, Neeraj, for that. But that's the stocks for you. We're also talking about bonds. Inflation in the economy is clearly trending higher. Wholesale price inflation rose to 3.5% in October compared to 2.6% in September. Rising inflation and risks to government finances are sending bond yields higher. Ira is pulling up a couple of charts from the Bloomberg to tell us what really is going on in the markets. Ira.
Right, so there's inflation, there's tight liquidity, and there's global bond yields. Those are some of the factors that are impacting the bond markets here back home. This is the inflation number, just putting it up for you. 3.59 is the number that you got for wholesale inflation for the month of October. The retail inflation numbers had also shown a trending higher. It's fuel prices that are feeding in, also higher and slightly normalizing prices on the food front are starting to feed into inflation. But that's not the only reason you're seeing bond markets starting to look nervous. So if you pull pull up this particular chart, it looks like bond yields are trending higher, partly due to liquidity. And the domestic market guys are saying liquidity and the fact that the RBI is continuing with its open market operations is the primary factor driving up yields. But if you look at this chart, oil seems to have been the other big factor which has pushed up bond yields. So 10-year bond yields have moved up pretty much in conjunction with Brent crude prices at a time when inflation is anyway normalizing. Higher oil prices are perhaps the worst thing for the bond markets, and also from an inflation growth scenario. Remember, because we don't have clarity on growth. So if inflation starts to pick up, growth remains shaky, you're sort of stuck in a little bit of a quagmire there. The other thing to point out is that while yields are rising back home, we are not the only country or the only market that are seeing a pickup in yields. So some of the other markets, just pulled up a couple of representative charts. China, for instance, the 10-year bond yield there went up about 4% for the first time in a very long time, and even a country like Malaysia has seen some pickup in bond yields. Individual domestic factors at play, but also perhaps a slightly broader global trend which is at play. Developed market yields and developed market bond scenario has also changed a little bit, and to highlight that, just pulling up this chart which is giving you a sense of the US yield curve. The US 2-year yield to 10-year yield chart is showing you that the yield curve is flattening, and that will have some implications as well globally. Joining us to talk about what's happening on the bond side globally and domestically is Vivek Rajpal. He's India rate strategist at Nomura, joining us on the phone line from Singapore. Vivek, thanks so much for talking to us. Great to have you. Let me start with India first. We took out 7%, which was important, I guess, from a psychological perspective, but some people tell us also important from a technical perspective. What's your view on 7% rates and how we've come this far?
Well, I think you have mentioned a few important factors. I'd just like to point out a few of them which are impacting the markets. I think most importantly, the factor number one which is impacting the market is fiscal uncertainty because of GST. There is uncertainty on the revenue collections, and there is uncertainty on the fiscal front, which effectively means that there is uncertainty on the bond supply. So we don't know exactly how much will be the bond supply in quarter 4 of this fiscal year. So that is number one factor which is impacting bond markets. Second factor which is impacting bond markets is RBI OMO sales. RBI has been continuously doing OMO sales, and they have already done close to 1 trillion. Given that there is already so much supply pressure, RBI's OMO sale actually adds to that supply pressure. And then number 3, really, market is also pricing out any kind of a monetary easing expectation, which is because of a rising inflation trajectory as well as the higher oil prices. So these are the few factors which are impacting India rates market, and these are the local factors that I'm talking about. It is worth mentioning here that a lot of central banks in Asia, like Korea, Malaysia, etc., have already sounded hawkish, and there is a theme building up that we may be entering into a phase where a lot of central banks will enter into a policy normalization, and which is also having a spillover effect on India bond markets.
Vivek, you spoke about what global central banks are doing. What about our central bank? What do you think, the RBI is, how is the RBI going to be looking at the situation? The CPI number, many people believe that this 4% plus level is going to continue. Does that dim the hope of a rate cut?
Yes, so I think RBI has made it clear many times that it is targeting 4%. Now, because it is targeting 4%, any inflation reading or any stable inflation above 4% is something which means that there is very limited, or rather negligible chance of a further rate cut. To be frank, India is operating at a very high real yield relative to where we are seeing inflation. But then, given the supply pressure that Indian bond markets are facing, and given the fact that inflation will stabilize above 4%, there should be limited hope of monetary policy easing expectations. monetary easing expectations.
Vivek, two questions. One is, what is your own call on Indian bonds? Do you have targets in place for the 10-year which may have changed because of the changing scenarios and the factors that you mentioned? I noticed while I was talking to you that the flows on the bond side are negative so far this month for the first time since January, a small negative, about 1,000 odd crore, but still negative after a very long time. Are foreign investors starting to turn negative on Indian bonds?
No, I'll to answer your questions, one, I have been calling for a steeper yield curve, and this is exactly what we have seen. But I would have expected bond yields to stabilize around current levels. I personally think that 100 basis point of spread over the repo rate is something which should be seen attractive from a buy and hold perspective. I think traders should avoid this market because market is always prone to overshoot or undershoot in one direction. Nevertheless, from a very medium-term perspective, if we are actually if we will see a stable inflation of 4.5%, and if RBI is expected to stay on hold, which is our base case, then 100 basis point of a spread over repo rate is something which should be seen very attractive from a medium-term perspective. Now, second question is foreign investors, they have started selling. So yes, what is one of the most interesting facts is that October was the month when debt outflows began in the rest of Asia. Correct. India was only exception in Asia. But in November, what we are seeing is that dynamic or that spillover effect is coming into Indian bond markets as well. I think a lot of foreign sentiment is actually driven by the oil prices, and therefore I wouldn't be surprised if the foreign flows get correlated with what we see in oil from here. So, for example, if oil actually falls, I would see a foreign investor coming back into the Indian market. But if oil continues to rise, we should see foreign investors actually leaving or selling Indian bonds.
Okay, Vivek, just one last very quick question. Are there implications of the flattening of the US yield curve on flows into emerging market bonds?
Right. So I think what is important is that US curve is flattening, but it's bear flattening. So in the sense that 2-year yield is rising more than the 10-year yield. And unless there is a terminal rate expectation change in US, yield curve typically flattens. So let me tell you that that bear flattening is still okay for Asian bond markets. If we start seeing a bear steepening kind of a scenario in US, that will be very, very detrimental for Asian bond markets. And my base case is that the trend of bear flattening that we are seeing, which effectively means that Fed will continue to tighten, whereas terminal rate will probably be stay where it is, where the market is pricing. If that plays out, that will continue to play out. So. Given a choice between bear flattening and bear steepening, I think bear flattening is still an okay scenario for Asian bond markets rather than bear steepening.
We will leave it there, Vivek. Thank you so much indeed for taking our call. Vivek Rajpal from Nomura talking about what's going on in the bond markets. Yields have spiked above 7% for the first time on the back of the inflation data that came in late evening. In a continued effort to pare debt on its books, Bharti Airtel is selling 4.5% stake in Bharti Infratel. In the long run, Airtel plans to give up controlling stake in its telecom tower arm. Sumit Sarkar is standing by to tell us what this really means for Airtel's balance sheet. Sumit.
So today, Bharti Airtel sold around 4.5% stake in Bharti Infratel for 400.6 rupees per share, and they garnered close to 3,300 crore rupees. Now, this is the third attempt in the last 8 months by Bharti Airtel to sell stake in non-core assets to reduce its debt. Now, they have brought down their holding from 71.96 in December 2016 to now 53.5% in Bharti Infratel, and they have reduced their stake by around 18.5% in this period. Now, in March 28th, they sold around 10.3% stake to a consortium led led by KKR and Canada Pension Fund for 6,200 crore rupees. Post that, they transferred 11.32% stake to its wholly owned subsidiary Nettle Infrastructure Investments, and then Nettle Infrastructure sold around 3.65% stake for 2,570 crore rupees, and today Nettle Infrastructure sold around 4.5% stake for another 3,300 crore rupees. Now, if you see, they have reduced their debt. They have reduced their stake to. They have sold their stake to reduce debt. So let's see how the debt picture has changed for Bharti Airtel. Now, on an absolute basis, if you see, the total debt of Bharti Airtel has reduced by close to 11,000. In December, they had a debt of around 1,08,000, which is now down to around 96,000 crore rupees. But the leverage position of Bharti Airtel still remains the same. Now, in December 2016, that total debt to EBITDA was around 3 times, and as of now also that total debt to EBITDA is 3 times. Now, Bharti Airtel has clearly said that they have been approached by global investors and they will be looking to reduce their stake in Bharti Infratel so that they become a minority shareholder in the company. Now, if Bharti Airtel brings down its debt to 40, holding in Bharti Infratel to 40%, that means they will be selling around another 13.5% stake, which will give them around 10,000 crore rupees, and the total debt will come down to around 86,655 crore rupees, which means the total debt to EBITDA would be down to around 2.7 times. Now, if Bharti Airtel brings down its stake in Bharti Infratel to 25%, that means they will be selling around 28.5% stake, which will give them around 21,000 crore rupees. Their total debt will be down to around 75,508 crore rupees, while their total debt to EBITDA would be down to around 2.4 times. Now, this is assuming that the company does not add more debt to its book and maintains the same level of EBITDA, which is quite difficult given the current market situations. Also, bringing down their debt in Bharti Airtel will boost their net profit, because lower debt would mean lower interest outgo, which will eventually boil down to their bottom line.
All right, thanks so much for that. That's the Bharti Infratel story playing out in tranches. Moving on, Bharat 22 Exchange Traded Fund is all set to open for public subscription tomorrow, with 22 marquee state-owned enterprises as part of that ETF. The aim is to replicate the S&P BSE Bharat 22 index. What do retail investors stand to gain? Let's see how this actually stacks up and how it plays out from here on. Jayesh is standing by with that.
So, they're going to invest in 6 core sectors, which will comprise of about 22 marquee names that you were mentioning. Now, there are some certain differences as when you compare Bharat 22 versus the Nifty CPSE. 2 of them really stood out for me. One is that Bharat 22, there's going to be a stock level limit of about 15% and a sector level limit of 20%. So essentially what this will do is that once this limit is triggered, there'll be rebalancing, which the fund has, which ICICI Prudential has given us to understand that it will be done in the month of March, that is annually. And the other feature is that most of these stocks, in fact 99% of the underlying stocks, are in the F&O segment, so there'll be no liquidity issues over there, ample liquidity available. Now they have mentioned certain valuation parameters which Bharat 22 looks very attractive on. One is the earnings growth forecast that they have from FY17 to 19. If you look at the numbers on the screen, the Bharat 22, they have an earnings forecast of about 16%, while the Nifty CPSE, which is the other ETF, is likely to grow at 12%, followed by the Sensex at 14% and Nifty at 13%. When you look at the price to earnings multiple, that too looks attractive for the Bharat 22. If you look at the March 2019 expectation that they have, it's available at 13 times earnings multiple, while the actual index, that is Sensex and Nifty, are available at 16 times. When we look at price to book value, Bharat 22 is available at about 1.8 times, which is slightly higher than the Nifty CPSE index, but lower than the Sensex and Nifty. Even for the dividend yield, Bharat 22 has a 2.4% yield, which is slightly lower than the CPSE, but over the Sensex and the Nifty. Now, in terms of the sectoral weightage, if you see, basic materials are going to constitute just over 5%, while industrials and utilities command more than 20%, and energy and financial space will command just little less than 20%.
Jayesh, thank you for that. Nimesh of ICICI Prudential, who will manage the Bharat 22 ETF, said that the companies in the index will benefit from the government initiatives over the next 5 years. Let's listen in.
The government of India wanted to divest, and in the divestment program they could have done it very easily with the institutional investors. They thought that they wanted the Indian retail to participate in it. So that's where they have created this Bharat 22 index. Bharat 22 index comprises of 22 government companies. We have worked very closely with the government of India to identify those 22 companies.
Right.
How have we gone about identifying those companies? We believe that the government of India is running some initiatives, like the infrastructure push that the government of India is saying. Since private sector there is no capex, government of India is getting into capex. So both these things, will it benefit which kind of companies? So the whole focus of Bharat 22 is 22 can be said 22 stocks also, 22 can say what will benefit in the year 2022. How can you make money for the 2000?
Right.
So that's the thought, that over the next 5 years, which companies will benefit because of the way the government of India is working.
Right.
So we have gone about, we had created a checklist. Government had a set of huge set of companies.
Right.
Out of that, to come into this index, we had created a checklist. What was the checklist? The checklist was price to book ratio of the company, P ratio, in a market which we believe is slightly has run ahead of its time.
Right.
The stocks that we should select should not be one which has already run away.
Okay.
Right, so we ensured that the stocks are valued properly, and one of the major focus of this was whether there is a good dividend yield. The index has got a 2.4% dividend yield vis-a-vis what the Sensex or a Nifty would be, which was around 1.5.
Right.
So there is a 1% incremental dividend yield. But the main focus was with the initiatives of the government, will this company do better? So if government is going to do capex, will an engineering company, will two of the prominent engineering companies of this country will do well? Right. So each of the companies, and another diversification that has happened in this one is 39% is private sector companies, government owned SUTI companies, whether it is an ITC or a Larsen & Toubro or an Axis Bank. So those are 39% of the portfolio, and 61% is the Navratnas of Navratna and similar big companies which will benefit out of the government initiatives.
Okay, so from what I understand is in terms of weight, the stock limit is 15% and the sector weight is 20%. So what happens if this limit exceeds?
The unique thing about this, normally a ETF is free float market cap index.
Yes.
In this, what we do, there is an element of smart beta in this, where we are saying that if a scrip crosses 15%, or if the sector crosses 20%, then we'll rebalance in every March.
How do you do that rebalance?
So the profit booking will, suppose 15%, if there is a stock which has a weightage of 14%, it goes to 17%, right? So then I will bring it down back to 15%, so that amount of profit booking will happen.
Okay.
Right, so that's the great thing about this.
I'm just going to come in here. How do you bring it down? When you say profit booking, the units will be held by different investors. How does it happen?
As a portfolio level. At a portfolio level, if I'm managing 8,000 crores of equity, and 17% happens to be in one particular stock, then I'll bring it down to 15% and some other sector will come.
All right, that's the Bharat 22 ETF opens for subscription tomorrow. We're on the last leg of the earnings season. Let's try and get a sense of the numbers that we're expecting today. Research team is standing by with each of those individual numbers. Let's go across to Darshan on the Sun Pharma numbers and what's expected there. Darshan.
See, we are seeing a 6,800 crore number as far as top line is concerned. That's a degrowth of close to 18%, and this will happen because of a high base that was there last time around. As far as profit is concerned, we are seeing close to an 800 crore bottom line that will come in, and margins will be close to 20% versus the 38% that we saw last time around. Basically, Taro, their US subsidiary, has already reported numbers, and that's come in much stronger than what the street was anticipating, so that will be factored in. Apart from it, if you're looking at it, revenues was weaker on the back of pricing pressure and competition that was there. The other factors that for Sun Pharma you have to consider is that they've managed to ramp up significantly for some of the drugs. So that will aid revenues a little bit, but there was no fresh launches or new launches that Sun Pharma did in this quarter. So that is something that you have to watch out for. India business will be strong given the fact that there will be restocking, given the fact that post destocking in the first quarter there will be restocking. So overall for the US business it will be weak. We are seeing of close to a 40% decline on a year-on-year basis and 5% decline on a quarter-on-quarter basis. And growth as far as India, emerging markets and rest of the world will be very, very strong. So that's what we are watching for Sun Pharma this time.
Darshan, thanks for that. Aisha, volume growth in Royal Enfield is likely to aid Aisha Motors this time. Yatin Mota is standing by with the details of what the key factors would be at play this time. Yatin.
Afternoon, Harsha. And if you talk about Eicher Motors this time, on a consolidated basis, we are expecting a strong performance. In fact, if you look at the sales, profit, EBITDA, we are expecting a growth of nearly 28 to 30% in that range. And clearly, this is aided by the strong performance of the Royal Enfield end of the business, which is doing extremely well with high double-digit volume growth for the second quarter. Also, if we saw a good volume and sales growth coming in for the Volvo Eicher commercial vehicle segment, which will probably lift the margins, which are expected to be close to 31.6% on a consolidated basis. Of course, if you look at the profits, they are expected to be close to 540 crores according to the Bloomberg poll. And we'll be keenly watching out for the management commentary on the Royal Enfield end of the business, wherein we have seen some slowdown in the overall order book. Of course, the management commentary also will be important on the commercial vehicle segment outlook for the second half of this financial year, apart from the earnings.
Then thanks for that. Moving on to GAIL, where higher gas prices could be the factor to watch out for. Somit joining us with the details on what's expected. Somit.
So on a standalone basis, GAIL is expected to come out with a steady set of numbers. The revenue would be higher by 14% to 13,000 crore rupees, while net profit would rise by around 8% to 1,100 crore rupees. EBITDA, on the other hand, would be marginally down to 1,874 crore rupees, while margins would contract by around 220 basis points to 14.4% in the second quarter. Now, gas transmission volumes are expected to rise by 4% to 104 million metric standard cubic meter per day. Now, in the second quarter, increase in gas transmission volume, better petrochemical profits, higher gas trading profits will partially be offset by the, weak performance from the LPG and the gas trading segment. Now, transmission volumes are expected to be higher on the back of the spurt in the power demand that came in the second quarter, and because also of the low spot LNG prices. Also, petrochemical profits will be better because in the first quarter there was a plant shutdown, so the volumes would be higher in the second quarter. Now, the LPG segment is expected to be weak because of lower realizations. Now, in this second quarter, petrochemical volumes are expected to be in the range of 1,80,000 to 1,85,000 metric tons versus 1,31,000 metric tons in the first quarter. So, key things to watch out would include transmission volumes, guidance on trading volumes, and petrochemical profit.
Samit, thank you. The last one off the block is Bank of Baroda that will be posting numbers today. Shraddha standing by to talk about what's expected on asset quality and on provisions. Shraddha.
Well, yes, this quarter as well, I mean, being a PSU bank, all eyes will be on asset quality for Bank of Baroda, especially after they saw a big slip on that front in the first quarter. But in terms of the key estimates, Bloomberg estimates, net interest income is seen growing by about 3.5%. Net profit is expected to come in about 25% lower at 414 crores. That's the number analysts are broadly working with. But on a sequential basis, it will mean doubling of the income because Q1 was a pretty muted quarter. Treasury gains, of course, will be lower on a sequential basis. Margins are expected to improve on a sequential basis owing to the South savings account rate reduction that they took. And all these quarters, the last few quarters, Bank of Baroda had been reporting a degrowth as far as their loan book was concerned. Q1 saw a marginal pickup, so that trend is expected to continue in this quarter as well. 8% is the kind of loan growth number the street is working with. Slippage accretion, of course, is expected to continue, but the pace is expected to moderate from the earlier quarter. So yes, broadly, everybody will be looking out for the management commentary in terms of the slippages number, the restructured book, the various SDR 5/25 refinancing that they have done, and also with respect to some guidance on the kind of provisions that they will have to make for their exposure towards RBI's second list, and broadly anything that they have to say with respect to raising capital as well. But broadly, all eyes on asset quality, yes.
All right, Shraddha, thanks so much for that. So those are all the earnings that we are watching out for. So we'll slip into a quick break, come back on the other side, discuss the possible rise in sugar output with Abhinav Verma of ISMA.
Are we live?
Welcome. To Programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
A series where we speak to some of the best investing minds in the country and try and gauge on the current investing climate. Our guest today is Swanand Kelkar, ED of Morgan Stanley Investment Management.
The macro repair story has very much played out. Is it much more difficult getting stocks right now? I think that is the basic nature of investing. When you want to go out and buy, things are not cheap. When you're feeling scared and want to invest in fixed deposit, that is exactly the time when things are cheap. So I think what's interesting for me and what stands out for India, and we wrote a piece about it called The Joy of Rowing Downstream, is that India offers a unique combination of growth and acceleration.
You're back with us on Power Lunch. The headlines at this hour. The Nifty slips below the 10,200 mark for the first time in 3 weeks. Oil marketing companies are among the biggest losers.
Indian 10-year bond yields move up above 7% for the first time in more than a year. Latest inflation data probably closes the room for an RBI rate cut.
A 3-judge Supreme Court bench is expected to pass an order on whether a special investigation team will be set up to probe against allegations of bribery of judges.
All right, at the half hour, let's take a check on the domestic markets. Pradeep Pandya is joining us with all the stocks that are moving. Pradeep, what's keeping the markets active today?
Well, it looks like, what traders and dealers really tell me is that bears are now getting tired. We have seen a 300 points correction in Nifty, roughly 1,000 points in Sensex. And it's interesting to see, some of the heavyweights like RIL finding some buyers at lower levels. The stock has moved up in last half an hour of trade. So possibly what traders really feel that there could be a downside of 50, 60 points here on. And beyond that, it would be difficult to sustain. So there is a likelihood that some kind of buying may emerge. What's also interesting is if you look at the trade so far since morning, Nifty futures have been sustaining a premium of 45 to 50 points. That hasn't really changed. That also kind of gives us some idea that the 10,200, 10,150 odd levels that bulls are kind of hoping to defend is actually being sustained strongly. If you also look at India VIX, it has moved to 14.5, and what has happened over last few sessions also we have seen that when VIX really moves beyond 14, 14.5 towards 15, it kind of retraces from those levels and we go all the way back to 12. So maybe that mean reversal is something that traders are actually looking at. If you look at...
If I could just interrupt you there for a moment. I'm just looking at Aisha numbers on your screen. Comes in about 518 crore on an estimate about versus 520 crore. On the revenue side, and I'm reading this off the terminal right now, on the second quarter revenues have come in at about 21.7 billion, or that's about 217 crore. That's marginally below the expectation of 220. There is the share is that's the stock for you. It's falling. It's been below expectation. The stock is moving quite substantially lower, about 1.5% as we speak. But that's the headline number. Consolidated net profit has come in at 518 crore, as against an estimate of 540. Top line is at about 217 versus an estimate of 220. There's an other income component of 699.4 million rupees that I'm reading off the terminal. We don't know what the details of this is. Total cost of about 15.4. on the face of it, consolidated net revenues at 2,170 crore versus an estimate of 2,200 crore. That's iShares numbers for you. It's not looking good for the stock. The stock is moving about 1.5% in the red. That's iShares. Pradeep,
so a little bit of disappointment in the stock, which is kind of priced to perfection.
Yep.
And there is a very significant, the base effect also now catching up with iShares because
they've been running at such a hard pace. It's sustaining it for a while now. So both in terms of the stock and in terms of their sales as well.
So selling 70,000 plus vehicles a month is kind of a challenge. But let's move to some other stocks. What has been dragging markets was L&T after the weak guidance. So numbers are what market is tracking. Also Sun Pharma, although Taro numbers were good, but market is probably focusing on the surprise inspection by US FDA, the exclusive report that we had released, and Bharti Infratel, there was a deal. So still, I mean, today you can find several key losers in the market, but there is a reason behind it. There's some kind of news flow. This secular selling or the offloading that has been happening in the market is kind of tapering off, and dealers really hope that markets will probably find a base somewhere here, in terms of Nifty, around 40-50 points from current levels, and we should be able to find a base.
Okay, let's just bring up that iShares stock for you for a moment, because that's where the numbers have come out. You've seen the stock reacting 2.5% lower. This is clearly what not the market was estimating. But broadly, if you look at it, it's not been such a big miss. It's broadly in line with what the market was anticipating, both on the top line and on the bottom line as well. Yatin is back with us. Yatin, you were talking through some of the expectations on iShares. What do you make of the numbers on the face of it?
Harsha, not a very big miss, but if you look at the absolute EBITDA, we were expecting a number of close to 700 crores, and they have posted EBITDA number on a consolidated basis of close to 680 crores. So it's not a number which is quite below estimates. I would say a slight miss to estimates. If you look at the top line also, just that has come in close to 2,200 crores, and profits also we were anticipating a number of close to 540 crores, and the actual number is 518 crores. On the margin front, the margin is 31.4, which is a 50 basis points improvement on a year-on-year basis. So numbers not that bad, but clearly we would have to see the bifurcation as to how the individual pockets have moved, especially the Royal Enfield end of the business. But clearly this point in our numbers look largely in line with the street expectation. We are joined by Priya Ranjan. Thank you so much for joining in. My question really would be on the margin front. Do you think the consolidated margin at 31.4% is satisfactory? Okay, we don't have him anymore, but we'll try and repat that line. But on an overall basis, Harsha, it seems to be an inline kind of a quarter for Eicher Motors, with the profit growth coming in at close to 28%.
Do we know at this juncture, Yatin, maybe it might be a little early, that there is another income component? If you shave that off, does it still look okay?
Yes, still look okay. Still looks okay, Harsha, because given the fact that the absolute EBITDA for the company has come in at 681 crores versus our poll of 700 crores. So on the operational front, it's hardly a 3% kind of a miss. So we don't call a 3% kind of a deviation from the estimates as a miss, but slightly lower than what the street was anticipating. Of course, we have the analyst again with us. Priya Ranjan, if you could tell us, is 31.4% at the EBITDA margin level a satisfactory number to your estimate?
This was my estimate only. So, but there is some little bit miss on other income, etc. So otherwise, broadly operating level, the numbers looks all right.
Okay, and on the revenue front also, the consolidated revenues have come in at 2,170 crores, and the profit is coming at 520 crores. So do you think this is a satisfactory quarter for them, because the stock is reacting adversely, and the stock is down almost 2%. So is this more like a valuation profit taking which is happening on the stock, or probably you see this as an opportunity to buy?
So I see this as an opportunity to buy. Basically, because I mean there will be some hit on the top line because of the GST changes and all.
Okay. Thank you so much. So it is more or less inline kind of a quarter as far as Eicher Motors is concerned. Of course, the GST related adjustments as well as the performance of the standalone operation is something that we'll be watching out for. Of course, the management commentary will be very important on the commercial end of the business, because a lot of analysts are anticipating that in the second half we could see the CV volumes rebound for most of these auto players.
All right, thanks Yatin for that. That's Eicher Motor for you. That stock has responded negatively, although Yatin mentions that the numbers have not been dramatically different from what the market was anticipating. Let's shift focus now to global market. Jasper Lawyer, Head of Research at London Capital Group, joins us to give us his views on how global markets are positioned. Jasper, thank you so much indeed for joining us on Bloomberg Quint. What have you made of risk appetite at this point in time, and how do you think global financial markets are positioned?
Good morning from London. Well, I think we've obviously seen a little bit of a sell-off here in global markets, a bit of a pullback that was well overdue, and I think it's fair to attribute most of this to a little bit of concern about the direction of the U.S. tax cuts / U.S. tax reform. That Senate version of the tax bill pushing back the tax cuts till 2019 just wasn't too well received. That said, it's actually U.S. markets that have probably pulled back the least, and I think there are some kind of regional factors, particularly here in Europe, as to why some of these indices here have pulled back a little bit further. The German DAX, for example, hit some big round numbers, has dropped back to the 13,000 level, and we saw a bit of a rebound yesterday. So maybe signs in Europe that we're beginning the start of the buy the dip scenario that we've seen so many times in markets. Slightly less obvious here in the FTSE 100 for the UK markets. Just because we have a little bit of political turmoil here at the moment. Prime Minister Theresa May's future looking somewhat in doubt because a group of Tory MPs are looking to oust her as leader after that pretty dire election we had a couple of months ago.
I'm just looking at the Bloomberg dollar spot index, Jasper. It's relatively steady, but you've seen the dollar be a bit volatile in the last couple of weeks. Which way do you think that's headed, and what are the pulls and pressures?
Well, yes, we have seen the dollar pull back a little bit, and I actually think that that could continue, particularly when you're looking at currencies like the euro, which is obviously a big component of the dollar index. Just because I think the overall theme there is that while the Fed are still hiking interest rates, they're doing it at such a gradual pace because of the low inflation in the US, and we've seen inflation expectations actually tick down recently in the US, the flattening of the yield curve, etc. And here in Europe, although we're obviously not hiking interest rates, we are moving to the point in which the ECB will be tapering. And so, to me, we're looking at more of a convergence of monetary policy rather than a divergence, and that's why the euro has some room for appreciation. It's obviously going to be choppy along the way, but to me, that overall theme makes sense as to why actually this bounce back that we'd had in the dollar for a while, now it's starting to end.
Jasper, on that point on US yields, good afternoon, this is Ira joining in as well. We were speaking to somebody from the bond markets a little bit earlier who was making the point that the yield curve is flattening, yes, but it's flattening because the 2-year yield is rising rather than, the 10-year yield. His point simply was that until the long end starts to rise, perhaps it's not as much of a concern for global markets at this point. Would you agree with that?
Well, I suppose that's part of the concern, really, is that obviously, the 2-year yields are rising in reaction to the raise in short-term rates, but you want to see the long-term yields rise proportionately as well to reflect stronger growth going forward, to reflect higher inflation, which you'd expect from that stronger growth, and we're not really seeing that, and that's the kind of warning sign. And to some extent, I think it makes sense, and I'm not overly necessarily concerned about it because we've been 10 years or so now without much of a recession in the US or other markets, and we're probably overdue one. This is a sign that maybe in the next year or so it's going to come. I think it's not necessarily it doesn't have to be another financial crisis. It's just a necessary recession in some of these economies that have been growing for a prolonged period.
Jasper, the Indian markets have been relatively nervous after the oil prices have been moving gradually upwards, closer to that $65 mark. What is your sense of what's going on in the oil markets and the implications they have on stocks?
Well, it's definitely a changed dynamic, I think, in all markets. Ever since we had that sudden drop after OPEC first extended the cuts, the markets didn't react very well. We had that sell-off down to about $45 in Brent, and that proved to be that short-term bottom, and we've really been rallying since. And I think that was the last test of the conviction of the bears in oil. They failed the test, really, and now we find ourselves $60 plus, and you hear the general consensus shifting from a sort of $45 to $50 oil range now. Now a sort of now a 50 to 70, 60 to 70 type range. I actually see oil prices extending further from here and getting to more of a sort of perhaps a level which obviously India as a country wants as an importer wants the lowest price possible. But I think something along the lines of $70 oil is probably the kind of mid price where importers are still not paying the kind of $100+ barrel that we were a few years ago. But it's still sustainable for producers, and maybe that's a kind of happy place where the market's actually heading. And I don't think it necessarily has to be a big problem for markets. I think there's still obviously a large weighting of energy companies across stock markets generally, and particularly in the West. I think that the fact that those energy companies' profitability is going to improve will generally be a positive factor for the market.
Jasper, we'll leave it there. Thank you so much indeed for joining us. Jasper Lawler joining us from our studios in London with his views on global markets and oil prices. All right, back home, we talk about the primary markets, and it's been a record year in the primary markets. Let me just pull up one chart for you, Ira, and this is an interesting one. We've seen about 151 IPOs so far this year. That's double the number of IPOs that we've seen since 2010. That was, I'm saying 2010 because that was the last decent year for IPOs. But here, the interesting story is the guys who are managing these IPOs. Call them underwriters, lead managers, what have you. For an easier term, I'm just calling them financial advisors. The Bloomberg league table shows, and if I can pull that league table chart for you, that the domestic brokers have clearly dominated this IPO round this time around.
Yeah.
This is a very, very different scenario from what happened way back in 2010. I have to get that list to have this conversation. The first on that list is Axis Bank at 10.3%, Kotak about 8%, Citi at about 7%, and ICICI at about 6.8% of the market, and IDFC controls about 6% of the market. It's interesting because all the foreign guys, if you take the top 10 list, only Credit Suisse, Nomura, and Citi actually feature in that list.
Wow.
The Morgan Stanleys and the Deutsches are missing. That shows you two things. One, it shows the kind of dominance that the local guys have had on the primary markets, particularly the smaller size, smaller players, isn't it?
Yes, yes.
And I just want one last point on the graphic plate is that in 2010, it was a complete reverse.
Yeah.
This was a market dominated by the foreign guys.
Yeah.
It was the Morgan Stanleys and the Citibank and the Deutsche Banks of the world that control nearly 35% of the market.
Yeah.
They're out.
No, I think this is fascinating. I think, over the last couple of years, not this year, every time they were asked about their reducing role in the Indian market, a lot of these foreign guys came in and said, we don't want to play in the smaller ones. We're going to wait for the big ticket IPOs. Well, the big ticket IPOs are here.
Yes.
So the data you've pulled up is fascinating because even with the big ticket IPOs here, and maybe there is some justification that a lot of these are government IPOs. So maybe they don't want to play in the government IPOs. There's no big fee there.
Yeah.
But it's still interesting to me. And if I can make completely extrapolate this is again, a testament to the fact that foreign banks in India, whether it's in actual banking or in investment banking, have been losing share and mind share as well.
Mind share is an interesting one. You mentioned fees. The point that I forgot to mention was ICICI, which is actually ranked number 4 in the league table, made close to about $6.9 million. That's higher than the third ranked player, which is Citi. So even this fee argument really doesn't hold anymore because the domestic guys are not only garnering the share, they're also making a lot more money from these deals. It's an interesting one and you're right. This is the trend that's playing out in the entire banking and financial services space.
No matter which segment you look at, right? Whether it's core banking, wholesale banking. I think the only thing these guys now have a dominance over is overseas bonds, foreign currency bonds.
Yeah, I suppose.
But interesting one there.
Okay, from that to sugar. Sugar production in India is set to bounce back from a 7-year low, it seems. And two factors are boosting that output. One is a higher planted area of sugarcane and rainfall that's supposed to be normal. How much is the industry likely to benefit? We're joined by Avinash Verma, Director General at Indian Sugar Mills Association, or the ISMA. Avinash, thank you so much indeed. A Bloomberg survey shows that the production may bounce back after what has been a rather poor year last. What is your assessment of output? What are you working with?
Yes, as we've already put out in the public domain, ISMA is expecting this year's production to be at 251 lakh tons of sugar, which is going to be almost about 48 lakh tons more than we did last year of 203 lakh tons.
So, Avinash, we've also seen a global glut as far as supply is concerned, and that led to nearly a 20% fall in prices. Would pricing power return? Do you expect prices to stabilize, go up from these levels?
See, as far as the global market is concerned, yes, there is a glut in the global market because of which the global prices have crashed. But we in India are producing almost whatever we are going to consume domestically. So we have a very balanced kind of domestic supply and demand position in this season. We expect the production to be 251 lakh tons and the domestic demand to be around that. We are starting the year with a very, very reasonable opening balance of about 39 lakh tons. And therefore, we are going to be more or less insulated from the global prices or the global glut. So within the country, a very balanced position, and therefore we don't see any big movement in the domestic sugar prices.
Okay. One last question. Despite the fact, do you expect our imports to sustain at the same levels as last year? Given the fact that the outlook seems pretty strong, would you anticipate us importing lesser?
Imports in this season should be zero. We do not require any kind of import this year.
That's interesting. Thank you, Avinash, for joining us with your views. That's the sugar industry expecting a fairly decent bounce back in the overall production. That's thanks to good rainfall, and crop output seems to be relatively good. October is the crop year. So ISMA, the Sugar Industry Manufacturers Association, says they're expecting this to be on track, expect the year to be good. No imports currently. So let's see how those sugar stocks have really performed and are likely to perform in the next couple of months. Yeah.
All right, that's sugar there and the output scenario there. Moving away from markets and business into a story which is critical and has been playing out for the last few days. The Supreme Court is expected to deliver its order on forming a special investigation team to look into the matter of admissions at medical colleges. The case gained prominence after some of the petitioners raised objections to the Chief Justice of India determining the bench that would hear this petition. Arpan Chaturvedi is joining us. He's giving us a sense of what has played out so far. The decision is likely later today in the afternoon. Arpan.
The judgment today, which will be pronounced in just a few minutes, basically will talk about two things. One is the prayer that was asked by the petitioners that an SIT investigation be initiated under the direction of the court and headed by a former justice of this court into these allegations that bribes were being sought to allegedly settle a case which was being heard in the apex court at that time, and a retired High Court judge of Odisha High Court and certain middlemen were arrested by the CBI in relation to this conspiracy. That is one. And the second is that whether the arguments put forward by the counsel of the petitioners, namely Mr. Prashant Bhushan, whether that arguments put forward make them liable for contempt. These are the two grounds on which the judgment will speak about, and the judgment is likely to be at 2 p.m. this afternoon.
All right, now former Attorney General Soli Sorabji believes that the entire drama at the Supreme Court is regrettable and distressing. Speaking to Bloomberg Quint, Sorabji added that the institutional process must be followed in the court of law. Listen in.
Well, I think it's very distressing and regrettable. I don't think members of the bar also should behave in a manner which brings down the authority of the Supreme Court. After all, bar and the bench, what are they both interested in? To see that justice is done, to see that fundamental rights become living realities for the various people, the indigent people, the underprivileged people. And that's the endeavor of both the bar and the bench. Now, they may have different views of how to go about it, but what happened and about the expressions of certain expressions used about the Chief Justice, I don't think it's very unfortunate. I don't like it at all. On the contrary, we normally blame the executive for trying to interfere with the administration of justice and to make allegations against the judiciary. Here is the case, you should complain of the executive is the judiciary is running the country. The executive does it, okay, but members of the bar singing the same tune, I found it very distressing, very distressing.
Sorry, Surabji there. Well, politics. The BJP is at a 22-year record run in Gujarat. Will anti-incumbency finally be a factor in these elections, or is the ruling party working towards dividing the anti-BJP vote? In an exclusive interview to Bloomberg Quinn Sanjay Pugalia, Chief Minister Vijay Rupani talks about the BJP's vote share, Rahul Gandhi's popularity and more. Listen in.
हम लोग टीम स्पिरिट से काम कर रहे हैं. ये सब रिले रेस है. अब मेरे हाथ में कमान है तो मुझे ही जवाब देना पड़ेगा, स्वाभाविक है. लेकिन कोई टेंशन नहीं है. सत्ता में तो बीजेपी की सरकार ही बनने वाली है, सब मान रहे हैं.
इस पे कोई ज्यादा डिबेट
नहीं है. लेकिन कितनी सीटें आएगी, वोट शेयर क्या रहेगा, उसकी चर्चा हो रही है. लेकिन मैं आपको बताऊं, जिस तरीके से यूपी में कोई मीडिया मान नहीं रहा था. सब लोग कह रहे थे कि किसी का सपोर्ट लेना पड़ेगा, और मायावती ने पहले कह दिया हम सपोर्ट नहीं देंगे. महंगाई नहीं था फिर भी कह दिया उन्होंने. उसी तरह से दूसरे दिन अखिलेश ने किया, जरूर पड़े तो हम मायावती के साथ बैठेंगे. फिर भी बीजेपी ने अकेले 325 सीट प्राप्त की. उसी तरीके से गुजरात में भी आप जरूर देखना 150 से ज़्यादा सीट आएगी. 3/4 मेजोरिटी से हम चुनाव जीतेंगे.
तो फिर मेरा ये इंटरप्रिटेशन सही होगा क्या सर, कि दरअसल बीजेपी की जो इलेक्शन मशीन है ना, वो इस तरह की है कि अगर जनमत थोड़ा ऊपर नीचे है भी, तो भी इलेक्टोरल मैनेजमेंट बहुत तगड़े ढंग से कर लो. और वो क्या है कि अगर एंटी बीजेपी वोट है तो वो एक जगह इकट्ठा ना पड़ें, उसके लिए वोट को बंटवाओ. बंटवाने की पॉलिटिक्स हर चुनाव में हर पार्टियां करती है, ये भी नया नहीं है. नया क्या है? नया है वाघेला साहब का प्रयोग. नया है प्रफुल्ल पटेल साल भर से घूम रहे हैं, अब एनसीपी के कैंडिडेट खड़े हो जाएं. नया होगा कि कांग्रेस के किसी व्यक्ति को टिकट न मिले तो उसको टिकट दे देना. तो वोट काट करके वोट शेयर का मार्जिन मेंटेन करने पर आप लोगों का इस बार पर बहुत ज़्यादा ध्यान है.
नहीं है हमारा. हम तो पॉजिटिवली विकास के नाम पर हमारा शेयर बढ़ाने के लिए हम कोशिश कर रहे हैं. वाघेला वो अपना प्रॉब्लम है उनका. वो कांग्रेस उन्होंने जिस मुद्दे पर छोड़ी, कांग्रेस के नाराज होकर नई पार्टी बनाई. एनसीपी तो कांग्रेस के साथ ही है, वो क्या करे क्या नहीं वो कांग्रेस और उनके बीच का मामला है. कांग्रेस में जो लोग नाराज हो तो हम क्या करें इसमें. नेचुरली ये पॉलिटिक्स है तो कुछ ना कुछ इधर उधर होगा उसमें. लेकिन बीजेपी अपने बलबूते पर, अपने कार्यकर्ता के सहारे पर, जनता पर भरोसा रखते हुए, विश्वास रखते हुए मोदी जी के नेतृत्व में हम आगे बढ़ रहे हैं.
तो अगर आपकी बहुत अच्छी जीत 48% कम वोट शेयर से होती है, 57 था 2014 का, 48 रहा है विधानसभा चुनावों का एवरेज, 48, 38, 49, 37, इस तरह का 10% का गैप रहा है. अगर 10 से घट करके वो 8 हो जाए और फिर अपने को चिंतन मनन करना हो कि इसके लिए अपने फैक्टर क्या माने, जिम्मेदार फैक्टर कौन है, तो वो फैक्टर जिम्मेदार क्या होंगे?
नहीं, पहले तो सम्मति नहीं है. 55% से ज़्यादा वोट मिलेंगे और भारतीय जनता पार्टी 3/4 से ज़्यादा वोटों से हम जीतेंगे.
55% वोट शेयर सर आप प्रेडिक्ट कर रहे हैं और 150 सीट आप प्रेडिक्ट कर रहे हैं.
जरूर 150 से ज़्यादा.
150 से ज़्यादा यानी विपक्ष मुक्त गुजरात बनाएंगे आप?
ऐसा तो नहीं कह सकते क्योंकि 182 सीटें. लेकिन मैं मानता हूं कि कांग्रेस को जिस तरीके से पिछले 3 साल में जितने चुनाव हुए राहुल गांधी के नेतृत्व में, कांग्रेस को जनता ने उखाड़ कर फेंक दिया है, तो वही हाल गुजरात में भी होगा.
सर एक बहुत सच्ची बोलूं, इंटरेस्टिंग बात अगर कहूँ आपसे, राहुल गांधी के बारे में अपेक्षा कम हो गई थी उनके परफॉर्मेंस के कारण, चाहे जो भी. दरअसल बहुत सारे लोग ये बोल रहे हैं जो ये कहते हैं कि देखिए हम बीजेपी से खुश नहीं हैं, वोट मोदी जी को दे देंगे, रूपानी जी को दे देंगे, लेकिन राहुल थोड़ा सा प्रॉमिस शो कर रहे हैं. कुछ आंकड़े मैंने देखे आपके पास आने के पहले, मैंने थोड़ा सा स्टडी करने की कोशिश की, इस पर भी डिबेट हो सकती है. वो ये कि चैनलों की टीआरपी में गुजरात की बात कर रहा हूँ मैं, राहुल पहले कहीं ठहरते नहीं थे. अब राहुल ने जंप मारा है और मोदी जी नंबर 1 है, लेकिन अब राहुल को टीआरपी मिल रही है गुजरात में, मैं टीवी के मेजरमेंट से बता रहा हूँ।
मैं आपको बताऊं कि अभी मोदी जी के दौरा नहीं हो रहा है, हमारे भी कोई लीडर का दौरा नहीं हो रहा है। 24 कलाक चैनल चलाना है, सुबह से शाम तक राहुल ही चलता है, क्योंकि राहुल यहाँ गया, राहुल वहाँ गया, राहुल ने पापड़ा खाया, राहुल ने बच्चों के साथ हाथ मिलाया, ऐसी न्यूज़ चल रही है। तो नेचुरली लोग क्या करें वही देखें ना। तो इसका मतलब नहीं है कि लोगों को इंटरेस्ट है, लेकिन चल ही रहा है, पूरा दिन वही चल रहा है, तो इसमें क्या करें हम?
The fascinating battle of Gujarat politics.
Absolutely. Stay tuned. You will see that full interview as well on Bloomberg Quint Live. But that's all the time we have on lunch. Thanks so much for watching.
Thanks for watching.